Nvidia is continuing to smash expectations. Year over year numbers are harder and harder to beat, and yet again, Nvidia is coming with massive year over year growth for revenue and profitability. In today's video, let's get into all the details that they just announced today so you're fully up to speed. So in this video, we'll be focused on Nvidia, but I'll also be releasing a video that dives into ELF's earnings. So if you're interested in hearing what ELF reported today and all the numbers and if they beat expectations and all that good stuff, then click somewhere up here. I'll include the video once that one's out as well. NVIDIA came in with a double beat on the top and bottom line. They weren't massive beats, but when you look at the year over year numbers, they were massive. Profitability growing by triple digits, revenue growing by 85% year over year. Even quarter over quarter, they're up massively. Initial reaction to this news is the stock is slightly down after hours. If we go back to what expectations were sky high. So even though they beat, the stock is likely reacting to the beats being single digits. And the fact that Nvidia has continued to have extraordinary growth rates. So the expectations are just sky high, and the market expects Nvidia to have these massive beats at this point. Now let's look at how they've done historically to earnings. So, first call out here, Fiscal AI, I think, is messing up because it's showing that they missed on revenue. But what we're seeing here is they were showing estimates were up at 86 billion, which is incorrect. That was not what expectations were. But I did just want to highlight this to show historically of how they perform. So if we can see going back to 2021, they've consistently beat expectations. If we look at profitability historically too, for the most part, Nvidia is coming in with beats consistently. Now, again, same issue here. It's showing that this most recent quarter that they missed, we actually know they beat here. So let's dive into some of the articles and the numbers from their actual report and see what updated information we got. So as noted here, they beat revenue and EPS expectations. We see here that the revenue in their data center unit doubled from a year ago, and this now accounts for 92% of their total sales. So data center has quickly become the leading driver of NVIDIA's business. We see gross margin came in at 75%, meeting the analyst expectations. And the main call out here is that their margin staying super high is showing that the strength NVIDIA has in their pricing power. Even though increased competition is starting to come online, we are not seeing it impact the margin that NVIDIA is able to maintain, which is a very bullish sign. So let's dive into their PowerPoint deck from this earnings report. So we're not going to go too much into detail on each slide. The thing I want you to focus on the most is just the difference in the year over year and how massively they're growing year over year for all these categories. So start off revenue, look at the number of almost 100% growth. Jump into data center, massive growth from last year. Gross margin, same story, huge increase from 60% all the way up to 75%. Operating expenses growing, but not nearly close to the same clip as revenue is growing. And as a result of expenses growing slower than revenue, we can see it reflected in the EPS and a massive growth of greater than 100%. Cash flow astronomically growing, as well as how much they're returning back to shareholders via dividends and share repurchase. And as a result of free cash flow growing so fast, they're able to do things like increase the dividend and increase share repurchases, as they call it here. They announced a new $80 billion share repurchase authorization. That's on top of $39 billion that they already have authorized that they still have to return back via share repurchases. Now, looking ahead to next quarter, what they're guiding to revenue, they're guiding for $91 billion, which was above expectations by analysts. Gross margin, they're guiding to maintain that 75%. So even one more quarter forward, they're still saying competition is not going to impact us. Now, if we look at the revenue by market platform, you can just look at the difference from the most recent quarter in fiscal 2027 Q1 to fiscal 2025 Q1. So in 2 years, they've tripled their revenue. Now, if we dive into their earnings report, it's more or less the same of what we've already touched on. Revenue, 85% growth, net income, 200% plus. And as a result of the margin staying sky high, revenue growing at a faster clip than expenses, their free cash flow is able to grow massively too, which in return benefits us shareholders by able to return more back to us via dividends and share repurchases. So in total, with the 80 billion additional authorization for share repurchases on top of the remaining 38.5 billion dollars, that's a total of $118.5 billion of share repurchases that are authorized for Nvidia to start buying back more shares. And if we look at analyst ratings, analysts have a strong buy for Nvidia with price 1 year price targets anywhere from 220 up to 380. So the average being 281 shows that there's about a 25% upside. And if we dive into a couple of charts, let's look at Nvidia's revenue and net income growth. Both are continuing to move up. Now, when we see the market not reacting with Nvidia skyrocketing after these earnings came out, a lot of times someone might wonder, why is the market not buying up Nvidia on these great numbers? Well, the thing is, the market is always forward looking. So, one of the main drivers is to always see revenue growth and net income growth accelerating. And what that means is they want to see the growth rate continue to move up. So, even though these numbers are sky high, let's lock in first at the revenue growth line. So what we can see is revenue used to be at 200% plus, then 100%. So it's actually came down from a growth perspective. But what we do notice here is that in the past few quarters, it's starting to accelerate, going from 55% all the way up to the most recent 85%. Same story can be said about the profitability. So we had huge growth rates at back in 800%, 1200%. So massive triple digit growth. And then we started to come down into the double digits and actually got down to 26%. But now that we're starting to accelerate again, all the way up to 200%. So now that there's a reacceleration, the market has something new to get excited about. And when it comes to NVIDIA, a lot of times people will start looking for the next new big, maybe small cap AI name because they're seeing those flying hundreds of percents. They're always looking for the next big name or beaten down company that they're expecting a recovery from. Sometimes, as Warren Buffett says, it's far better to buy a wonderful company at a fair price than a fair company at a wonderful price. And really, what this means is NVIDIA is the largest market cap for a reason. They're continuing to deliver excellent earnings and have extreme demand. So even though it might not be the cheapest stock, since they have great earnings, sometimes it's better to just stay on the path and continue to buy a great company that's at a fair price that in the long run will continue to grow at faster rates than the S&P will. All right, so that's all I got for you. Wanted to get this video out there quick with the quick reaction to Nvidia's earnings, talking through what the numbers were reported and showing that they had a double beat. Let me know down in the comments, are you a buyer of Nvidia after these earnings? If not, why are you not buying it? If you like this video, please hit that like button and hit that subscribe button, and I'll catch you in the next one. See ya.